It is recording.
Good afternoon, everyone. Thank you for joining us this afternoon for our webinar with Bryon Garrety. We're going to let Bill Joubert from the SBD Center in SLU open us up today.
Well, top of the afternoon, folks. Bill Joubert here with Louisiana Small Business Development Center at Southeastern University. Our Small Business Development Center is a partnership program with the SBA and Louisiana Economic Development. We've got additional sponsors on this program, which would include the St. Tammany Corporation, Hammond Chamber of Commerce, and of course, Southeastern. All this information, it's accurate as of today with all the new legislation. Of course, expect changes written in stone on this program. Bryon Garrety and our staff receive training and updates from SBA, so we try to be a good source of information for you. If you have a question, use the Q&A button at the bottom, type your question in. I would recommend typing them in early, and we will address those questions at the end. I've asked Bryon Garrety of Garrety Associates to guide us through this forgiveness part of the program, as he's done with the application side for the last, 20 events that we've had with him. Thank you, Bryon, a lot. We appreciate that. I've known Bryon most of my career. He's a former IRS guy with many years of experience and a real head for strategy. So, Bryon, the floor is yours. Thank you so much for doing this.
Thank you, Bill, and thank you for all of y'all for attending. We're going to talk about the PPP program and, kind of after you filed your application and received your funds. How do you stay in compliance, and what are the things that you need to watch out for? And this is just kind of the precursor or getting ready to fill out the application for actual forgiveness from the bank. Because the one thing we know is they're not going to forgive it if you don't ask them to. So we're going to try to show you how to get the right ask in there. Let's see if I can get, okay. I'm calling it Restarting American Small Business PPP Compliance. And again, it's, a lot of businesses have received their PPP funds. They're starting to pay payroll, maybe rent and utilities with it. And is there anything else we have to watch out for? And there are a few things we have to watch out for. Okay. Timeline wise, this whole Corona thing started in December. And we're not a full 6 months into it yet. And there's many changes, including what they call the Paycheck Protection Flexibility Act, which passed on June 5th. And that's where Congress went in and changed their original rules for the Paycheck Protection Program. They extended the 8 weeks to 24 weeks. They reduced the 75% that needed to be spent on payroll to 60%. And they basically made it a lot easier for most everyone to get full forgiveness of the loan. Prior to this change, a high percentage of people were going to get full forgiveness of the loan, but not necessarily everyone. This is a move towards that. Since passing that, the SBA this week has released new forms for forgiveness. We'll talk a little bit about those, and some interim guidance, and there's more guidance coming. So Bill already mentioned the fact that, hey, we're trying to stay as current as we can. We're trying to give you the most relevant information. We do know that there's going to be more information to come. Okay. Everything under the PPP program falls under the CARES Act. The CARES Act became a law on March 27th of this year. Okay. In the CARES Act is the pandemic unemployment coverage, which includes that $600 stipend from the federal government that makes unemployment actually maybe a livable amount of money. The legislation for the individual stimulus checks were finalized in that, the Paycheck Protection Program that we're talking about, as well as a lot of tax law changes and some credits that will come out. But I know those are more pertinent as you go to do your 2020 tax return, not so much today. Today, we're going to focus on the Paycheck Protection Program. This chart, after the seminar, you can request the slides or they'll be emailed to you. Remember this chart. We're going to see it again a little bit later in the presentation, but this is the cap for wages under the PPP program. On this slide, we talk about 8 weeks. That's what it originally was. You can put a slash in there and say 24 weeks. But the maximum compensation that somebody can receive while they're getting PPP is $15,384. Okay, that's the max. You're not supposed to get any more than that. And that's based upon a $100,000 annual base of salary. So it's an important rule. It comes back to give us some relief when we have to do some of our full-time equivalent calculations when we start to fill out our forgiveness application. Okay. Again, the maximum that calculation base for anybody was $100,000 a year. It's $8,033 a month, $1,923 per week, and the total for the 8 weeks / 24 weeks now is $15,385. So if you run your numbers and the boss got more than $15,385, we have to cap them at that amount before before we submit our application. Okay. Recap on the PPP program, because this is really the basis of forgiveness. If we always focus on what the intention of the program was, why Congress created that, it's to pay employees, okay? That was it. To get businesses restarted, to pay employees. It includes allocations for health and retirement benefits. So whatever you were doing before the pandemic hit, you're allowed to do through the pandemic, and that becomes part of the forgiveness calculations. Then also we get an allowance for some rent and some utilities and interest on pre-existing debt. Okay. When we get to the payroll calculations, what counts for forgiveness when we're talking about an employer-employee relationship? Salaries and wages, commission and tips, as they're reported on Form 941. Okay. If you go back to more than a month ago now, when you filled out your PPP application, remember that the base amount of the loan was 2.5 times your average monthly payroll. If you were self-employed, it was 2.5 times your average monthly self-employment profit. Okay. Just so we can kind of monitor who's in the program and who's attending the seminar, we're going to have a couple questions that we ask you. So if you've received your PPP funds, please go to the Q&A little icon at the bottom and type yes. We'll be able to gauge that against the number of participants we have. Hopefully most of the people here have. But the program is still open. There's still approximately, over $100 million in the program right now. The program itself is a sister program to the existing Small Business Administration 7A program, okay? Economic Injury Disaster Loan Program. This one we call the Payroll Loan Program, or the PPP. They can work together, and in some cases they have to work together. And what's unique about this one is that it can turn into a grant at the end. That was the unique part of the program, and I think where most of the interest came from. Side by side, if we look at an employer-employee relationship versus a self-employed person, they can both apply for PPP. They can both apply for forgiveness of PPP. 2.5 times their monthly average should be equal to 8 weeks of payroll based upon their 2019 numbers, their base period that they calculated on, and any excess over payroll can be spent on rent, utilities, and interest. Okay. The maximum benefit per person, $15,385. We've seen that number before, and it will come back again, and again as you apply for forgiveness to make sure nobody's over that number. One of the biggest mistakes we've seen in the PPP program, okay, is the fact that some people early on, when they were making application, included not only W-2 employees, but also 1099 independent contractors. Okay, it's still an issue right now. It will always be an issue. It'll be an issue when you go to try to get it forgiven, if those numbers were in there. The SBA and the Treasury Department were very clear. There's 2 sites here out of the Code of Federal Regulations. They talk directly about, do independent contractors count as employees for purposes of the PPP loan calculation or for the forgiveness? And the simple answer is they do not. And they don't because those people receiving 1099s are just that, independent contractors. They're not employees in any manner or form. So they get to apply for PPP on their own based upon their own tax returns and if you want to call it the sponsoring company, cannot apply for them. A little problem getting my slide switched. There we go. So the next little question is, do you know any independent contractors that should be applying for PPP right now? Independent contractors can also, qualify for unemployment, but I find that anybody over about $24,000 is probably better off with PPP than with unemployment, or that seems to be about the break-even line. For some reason, we're still finding independent contractors, even as of today, that haven't made application for PPP, and the program is supposed to close on June 30th. So that gives us, as of tomorrow, about 11 days left in the program. Okay. Quick run through the math. The average payroll amounts, if you're an employer, let's just say that 2019's total payroll was $120,000. We divide that by 12 months. We find out that average monthly payroll is $10,000 multiplied by our plan multiplier of 2.5, and our paycheck protection amount would be $25,000. Of that, the majority of that would be spent on payroll. Some other amounts would be available for rent, utilities, and interest, or all of it could be spent on payroll. If we're self-employed, the calculation's a little different. We have to prepare Schedule C for our 2019 tax return. So we look at line 31, which is net profit from the self-employed business. And in my example, we say that that's $60,000. We divide the $60,000 by 12 months. Our average monthly profit is $5,000 times 2.5. This self-employed person would receive a paycheck protection amount in the amount of $12,500. So where are we at in the PPP program? As of June 14th, going back just almost a week, there were 69,202 PPP loans processed in the state of Louisiana, a total of $7.241 billion. And as of last Friday, there was $130 billion left in the funds. So that's $130 billion that between this week and until June 30th could be distributed. I don't think they will actually end up distributing all the funds in the PPP program this time, and they'll probably reallocate those for other small businesses. Okay. So if you've gotten your loan, you're starting to pay your employees, and you're starting to think about forgiveness, or you've gotten the first emails from the bank that says, hey, here's the first form. That could have been a week or two ago. You can get rid of the first form because it's already been revised. What do we have to do? And our first step is not to jump into the form, okay? Our first step is to take a breath and let's look at where we're at, okay? So we want to make sure that the application that we filed when we first put in for the loan is correct. And the reason for that is if the loan was made with a material error or misrepresentation, it cannot be forgiven, okay? If it was breaking the law as it was written when it was input, it's going to break the law all the way through and it's not going to be forgiven. So if there is a chance to fix an error, especially if it's a material error, we want to do that now so that we have a chance for at least portions of the loan to be forgiven. Okay. So we have to make sure we use the right calculations. It really is just payroll, not 1099s. We have to multiply it by 2.5, not a different number. And then we need to make sure that we meet all of the certifications that were on the original application. The application that we got us into the PPP program was 2 pages long, okay? Took our basic information, and between page 1 and page 2 of the form, there were about 16 places you had to check yes, no, or initial. So these are all the certifications, and they're critical because if any of those are found to be false, we've got some corrective work we need to do. Okay. So if the SBA were to determine during its review of your loan, yeah, a lot of these loans are going to be audited. Okay. Automatically, loans that are over $2 million are subject to the SBA's review process, and then they will be doing a sampling of loans certainly below $2 million, and they're looking for outliers, things that don't quite touch. Now, the thing that you need to realize is that the SBA and is part of the Treasury Department, which means the IRS is under the Treasury Department. So they're going to be talking with the IRS on a regular basis. If the basis for your loan was $60,000, as it was in my example, but you end up filing your Schedule C with $30,000 worth of net profit on it, they're going to know. The computer's going to be able to match those things, and you're going to get a letter and have to bring in your information for a match. So we want to make sure all of your loans are eligible for forgiveness. Okay. Going back to those certifications, we had to first certify that we were a small business under 500 employees. We had to make sure that the calculations or our average monthly payroll amounts were correct. And we had to do all these things in order to calculate it. You had to put a number on the form for the number of employees that you had, and you had to check some boxes on whether or not you were going to use it for wages, mortgage payments, rent payments, or interest and utilities. Okay. The certification that I think is potentially the most harmful is the third one on this page. Current economic uncertainty makes this loan request necessary to support the ongoing operations of the applicant, of the business. Okay. Some businesses have done very well during the pandemic. If you were a business that either had in stock or manufactured N95 masks, you've never seen business like this before. If you were a toilet paper manufacturer, you've never seen business like this before, okay? But if you were a restaurant, your doors were closed, okay? Restaurants will be very, very simple, okay? Their doors were closed, they couldn't do as well. Their numbers are down, probably everybody knows it. And by standard industry code, they're probably not going to look at a lot of restaurants, but other businesses, they may. So what if you actually end up doing better or there was no downturn? That's where this gets to be important. We have to look at that one. So our suggestion is, not only do you segregate the money that you get from PPP and use it for the specific purposes, but you also have some other work to do. The SBA thought this was so important that they actually had a safe harbor rule that was in effect until May 18th of this year. And if you go back to the early stages of the program, there were a lot of companies that applied for the PPP funds, received the maximum $10 million, and then ending up returning it. The one that I think got beaten up the most in the press was Steak Shack. That company came out, got a $10 million loan, and then had to look at it and say, no, our restaurants are still open. We're still employing people, and they may not be coming inside the doors, but our carry-out business and our drive-up business is still incredible. So when we get to the documentation part on it, it's not only the paper forms that you can get, it's going to be documenting the state of mind that you're in. So this is where, as a business owner, I think it's time for you to take your CPA and your banker to lunch, okay? Because everybody needs to be on the same page here, and we need to make sure that the facts bear through. So talking with them, making sure you've got financial statements from December 31st, March 31st, April, May, June, and then until your 24 weeks are up, which could go all the way to December 31st, I think are going to be critically important, because those, of course, are going to end up getting compared to last year to say, hey, you're actually doing better, you're not doing worse. That's going to be important to look at. And if you are doing better, how do you defend the fact that you got the PPP funds? Some businesses, again, it's going to be very simple to defend. Hey, we had to close for 8 weeks, 9 weeks, 12 weeks. We had no revenue coming in. So documenting the state of mind, what was going on when you applied for it. It can't be just a reach for cash. We have to document the need. Your CPA and your banker can help you document the need. I've worked with dozens and dozens and dozens of clients in documenting the need. We either have their financial statements, we can comment them on. I can look at March of last year versus March of this year and say, hey, quite simply looking at your financial statements, you were down 33%. That's really all you need. But what if it's iffy? What if you're one of those companies that maybe works on a large trailing commission basis? I have some medical companies that I do work for. they're getting paid today on things they actually sold 6 months ago. Okay, so they're collecting their commissions from December and January now. Okay, they're really not going to feel the impact the of the pandemic and the ordered self-isolations until August. Okay, for them, we've documented the fact that they do have, they are commission based. It is 6 months trailing, and that we believe this is when it's going to happen. And then we were able to look at activities and document the fact that, basically 70% of the clinics that they regularly visited, all the elective surgeries that they were usually in, those were all postponed, delayed, or put off. So we know we're going to see an economic impact in August. I think it's important for y'all to be ready to do that too. Okay, so when we get to forgiveness itself, what are the options? Well, there's no forgiveness. Hey, something was wrong with the application. You didn't ask for it. Something wasn't right. So none of the loan is forgiven. Okay, there's partial forgiveness. Hey, based upon the numbers, it just didn't work out that 100% of your funds were forgiven. You're going to have to pay some of them back or just give some of them back, or the loan is entirely forgiven. The provisions of the Flexibility Act allow for a much greater percentage of all the loans to be forgiven. Okay, originally, congressional intent may not have been for 100% of the loan to be forgiven. Certainly in the case of self-employed people. Again, you have to complete the loan forgiveness application, the LFA, the 3508. The 3508 will have a June revision date on it. The original one had a May revision date on it. And we've got two Form 3508s, the standard form and then the 3508 EZ. Okay, banks will probably email you, the bank that funded the loan will email you, they'll ask you, they'll call you, they'll bug you and say, hey, it's time to get an application in. Now, we have lots of time. Okay, we have up to 10 months to get our application in. So an interesting period of time. But I would say when you're done with the PPP money, when you've looked at the calculations and said, I've spent all I can spend, I know the amounts that should be forgiven, I'm now at the end, that's when you essentially pay for or apply for the loan forgiveness. So most people will have to apply 24 weeks after they originally received the funds. There is an option for those people who close their PPP loans before June 5th that they can still apply the 8-week provision on it. But I'm advising most of my clients to say, let's let the 24 weeks run. Let's remeasure and just make sure everything is good. In order to be forgiven, there's 4 major tests. Okay, test 1 is now called the 60% rule. It used to be called the 75% rule. Originally, it said, hey, 75% of the money you receive has to be spent on payroll. It's been revised to say 60%. That makes it easier for small business. Under the 75% rule, 25% could be spent on the other allowable expenses, primarily rent and utilities. Now up to 40% can be spent on those other things. The test 2 is a reduction in salaries. We've got to look at the salaries we pay people, the wages we pay people on a person by person basis, and look at the total dollars that they get and say, hey, from really the first period of 2020 to the second quarter or third quarter, whenever your 24 weeks ends, did everybody really bring home the same amount of money? If I was paying somebody $10 an hour, 40 hours a week, and they were making $400 a week before the pandemic, are they all bringing home $400 a week after the pandemic? Again, that's a person-by-person test. If you have 2 or 3 people, it may be very easy. Yep, they were making this before, they're making this after. They didn't really miss any paychecks. If there are any paychecks we missed, we've made it back up. It's simple. And that'll be the 3508 EZ form for you. But if you have 55 employees, it's not going to be that simple. You're going to have to get into some of the Excel sheets that are out there and use some of the tools. Get with your payroll company, get with your payroll processors and say, hey, I got some data here and we're really going to have to drill into it. The third test is the full-time employee or full-time equivalent positions test, okay? In the most simple parlance, if you had 10 employees before the pandemic hit, they really want you to have 10 employees after the pandemic. So during your covered period, when you're spending the PPP funds, they want you to have 10 employees. Okay. Uh, there are provisions in there that realize that some businesses that just won't happen for. Okay. We'll go over what they call their safe harbors there too. And then test 4 is really the overall guiding principle of it. Were the funds used for the right reasons, or did we just take the money and go on a vacation to Hawaii? That would be a no-no. We don't want to see anybody do that. Okay, so test 1, if we kind of look at the 60% test, again, originally 8 weeks, now 24 weeks, or at your option, okay? But it's not 25 weeks. We've got a definite period we have to spend this money over. And under both laws, the original law and under the revised law, it starts on the day the bank gives you the money, okay? And what we're going to look at is that we're able to spend that money over time. I have 1 or 2 companies that will not be able to spend the money they got. 2019 was a high payroll year for them. It was the base year. And with the pandemic, they're just not going to be at that same level. Restaurants may face this, certain construction companies may face this. And so we've already counseled with the owners saying, hey, it's not all going to be forgiven. It's going to be given back, or it's going to be turned into a loan. One of the other provisions of the Flexibility Act is that originally the loan that it turns into was a 2-year loan. Now it's a 5-year loan. Okay, so a little bit longer amortization period. Okay, and although the 60-40 rule was one of the guiding principles of the PPP program, it's the last calculation that we make when we look at the form. Okay, reduction of salaries. Okay, one of the ones that we have to be careful of. Okay, if Joe Smith was working for me, all right, he worked for me from January 1st till March 15th or March 18th before the self-isolation orders went out, and was making $10 an hour, 40 hours a week. What happened when I got the PPP money? Okay, so when I got the PPP money, if I got it in May, did I put him back to work 40 hours a week at $10 an hour? If the variance per employee is more than 25%, it affects the amount of our forgiveness. So we have time here, okay? We've got our 24-week period, and now under the new law, we have until December 31st as a safe harbor. As long as I can restore that money to him, okay, or those hours to him by December 31st, we get a safe harbor, and we get to basically look at the test, say, hey, we might be subject to it, but we corrected it. And then the FTE test. I call it the big haircut. This one is where a business can really have a major impact on the amount of their loan that's forgiven. And it is, again, that simple test. How many employees were, at a 40-hour work week were working for me? So 2 people working 20 equals 1 FTE. 4 people working 10 hours a week equals 1 FTE. We group this in 40-hour blocks. Somebody works over 40, sorry, it's limited to 40 per person, so we don't get somebody who works 60 to count as 1.5. Little different than what the Treasury Department typically does. They usually start counting an FTE at 30, but for the purposes of this law, it's 40 hours. Okay. New rules, new words, or phrases that we have to be aware of. The period where we spend the PPP money is called the covered period. The periods that we test against are called the reference period. So we've got an option under both rules for 2 reference periods. The first one is February 15th, 2019 to June 30th, 2019. Don't know why they picked it. They're just looking at the pandemic and what they originally thought. And they're saying, okay, what was your FTE count there? This is where you're going to have to get with your payroll company, start running some detailed reports out of QuickBooks, getting with your payroll person in-house and say, hey, what did I pay people? What was their average hours? What were their compensation rates during this time period? And it doesn't fall evenly across quarters, as you say. So yeah, it's a specialized report. Most of the payroll companies know they're going to have to run this, and if you pick up the phone, they can send it to you. They may even be able to send it to you in an Excel table already. Okay, the second reference period, and at our option, we're going to analyze both and pick the one that's most favorable to you, is from January 1st, 2020 to February 29th, 2020. Okay, whichever one has the lowest amount of FTEs in it, when we do the math and divide it by the total hours divided by 40, that's the one we're going to take. Okay, that's the one that benefits you the most. If they both benefit you, I guess it doesn't matter, but the one that benefits you the most is the one that you get to elect to take. And then just always remember, at least in this case, an FTE is 40 hours per week. Okay, I mentioned that this table was going to come up again, and here we go. Well, why do we have it here? One of the safe harbors for the FTE calculations is dependent upon this table because it's based upon maximum compensation. Now, when we get to the FTE table, we get to exclude the owner of the business. We get to exclude those people that earn over $100,000 a year. And there's one other little caveat that's very, very interesting. If we had a person that in a pay period exceeded that average of $100,000 a year, they're exempted from the calculation too. That helps our denominator in this calculation and makes achieving that 100% forgiveness easier. So what does that mean? Let's look at a biweekly payroll. Somebody's getting paid every other week. Okay, the maximum compensation is $3,846. So let's just say you've got Joe Smith working for you. He normally earns $1,000 a week. So every 2 weeks, his gross paycheck is $2,000. But he got a safety bonus, he got a production bonus, he got something else, and it was another $2,000. In that pay period, he received $4,000. That's above 3,846. He's out for the calculation, so that helps your denominator. If you pay on a weekly basis, it's $1,923. Bi-monthly, I have the calculation on there. So this is some more math and some more Excel tables that every business owner who has a complicated payroll, more than about 4 or 5 people, is going to want to look at, especially if they know they were paying bonuses. Okay. So this example I alluded to earlier, but this is one of the slides that you're going to want to reference. Okay. If a business received $100,000 in PPP funds, based upon a 10-person full-time staff, okay? And that was in the pre-period, okay? That was before the pandemic hit them, okay? These would be the reference periods, okay? But now, as they're spending the PPP funds, due to various reasons, they're only at 8 full-time people. Well, the immediate calculation says, hey, we've got to look at 8 over 10, or we're going to lose 20% of our forgiveness. Okay, so only $80,000 is going to be forgiven or eligible to be forgiven, and $20,000 will not be. The things that help this calculation, because it can be such a dire cut, are first of all, hey, do I have anybody I can exclude because of the $100,000 rule? Do I get to exclude any owners? Hopefully I can. And a couple other provisions that are very important. Well, what if we had somebody who we offered to come back to work and said, hey, we're opening back up. We've got our funds. We've got a little business, come back to work. And they said, I'm still on unemployment. And they don't come back to work right now. That won't count against us as long as we do some of the right things. Okay. What if we have somebody that's actually positive with COVID and they can't come back to work? Well, there are provisions that help us out there. What if OSHA, DHH, anybody comes out and rules and says, you can't go back to work right now? There are provisions in the law that help us out there. So the calculation's important to say, hey, are we in any trouble? Or are we at any jeopardy? And then we start looking for the ways out of it. Okay, and the ways out of it may be, hey, we did contact all of the employees. We can document that we sent them letters. And a few of them even responded either via text message or email and said, hey, no, we're good right now. Don't invite us back. We'll see you in August or September. By the way, one of the letters that we use for sending out to employees will be provided to you at the end of the seminar. Okay. Again, when we get to this FTE reduction, that's the most complicated calculation. That's the one that we have to be most careful with because it is the biggest haircut or has the biggest impact on us. And it's the one where we need the most documentation. So we're going to need those reports from February 15th, 2019 to June 30th, 2019. We're going to need the payroll reports from January 1st, 2020 to February 29th, 2020. We're going to need to see if anybody during a pay period received more than the capped amount. And then we're going to have to start counting, collecting some non-numerical data. Hey, did we send return to work letters to everybody? Is anybody tested positive for the virus? Is anybody a caregiver, and they're stuck at home and they can't come back to work because of the virus? Has OSHA or DHH just ruled that no, you're not going to be able to do that? Okay. These are all the different reasons that come into play. So there's both numeric data we have to collect and non-numeric data we have to collect. Okay, and then at the bottom of this slide, we see the Table 2 calculation. When we get to the form, the 3508, we talk about Table 2. That's where we do the calculation to see if anybody was over $100,000 for the prior period and if they can be excluded from the calculations. Okay. All right, so we saw the biweekly payroll amount a few slides ago, $3,846. Did anybody exceed the biweekly threshold, or in your company, is there anybody that would have exceeded that? If you do, answer yes, and just know that they're going to be able to be excluded. Okay. When PPP funds are misused, okay, we did seminars on this and talked about it at the very beginning. If you go through the new 3508 EZ and the new 3508, there are additional certifications that you have to make that you spent the money properly. This is just not the area to play in. I think everybody's got a good heart. They want to do the right things, and nobody wants to get in trouble. But these are the things they will be looking for. Information. Where does the information that I'm providing you come from? How do you get access to the information? Well, you can call me, you can call the Small Business Development Center. You can go to a couple different resources. I'm going to have a slide on this in just a couple slides. You can go to the treasury.gov. You can go to sba.gov. You can go to the AICPA.org website. All of those places have quality information on it. The Treasury Department releases information almost on a daily basis concerning the PPP loan, okay? One of the things that is of particular interest to myself is on the Treasury page under the PPP program are the FAQs, frequently asked questions. So in my slides, I've put a few of them that I think are key to small businesses, okay? FAQ 40, the second one on this slide. Will a borrower suffer a reduction in forgiveness amount if an employee is laid off? Okay. The borrower offers to rehire that employee, but the employee declines the offer. No, as long as you can show that you offered them reemployment, that one will not count against you. So how do you show that? Well, you send the letter, you can send it certified. That way you get a certified card back, or you spent your $3.90 and proof that you mailed it. You can send emails. Maybe they respond, maybe they don't. You can send it out via a text message. I tell most of my businesses to send it out all three ways, okay? Some employees come back to work right away, other ones stay away. But I think that's an important FAQ for you. Out of 49 FAQs right now, probably 35 of them are related to individuals and individual businesses. There are a whole lot of them that are related to financial institutions, the banks that actually made the loans, okay? Determining the payroll periods, this has changed a little bit. We know we've gone from 8 weeks to 24 weeks. Some things about federal taxes. Remember, the PPP program isn't worried about the FICA tax or anything like that. It's just focused on the gross payroll. And FAQ number 15. So it was early in the thing, early in their production of the frequently asked questions. It comes back to that independent contractor question again. Can they be included as part of payroll cost? Again, they answer it. So there's three very key points, some in the Code of Federal Regulations and certainly in the FAQs, where it's an absolute that an employer does not put 1099 amounts in their calculation. And if you did, it's not the end of the world. It's just something we need to work out a fix on. All right. I don't know if everybody's had the chance to download the new 3508 from the SBA, but if you're on the long form, okay, on the full 3508, not the easy, okay, let's think about this for just a minute, okay. The application to get into the PPP program was 2 pages long, okay. If you have to do the full 3508, it's 11 pages long. So they certainly made it much easier to get into than to get out of, okay? 6 of the pages on the 3508, the long form, are instructions, okay? So it is complicated. You're not going to do it by yourself. You're not going to sit down in an hour and have it done. If you've got 10 or 15 employees, you're going to spend a day, okay, maybe 2, working on these calculations, because you need so much data from the prior year. You need those reference periods, and then you've got to start looking at your 24 weeks that you're going to spend this money over, okay. So it's not uncommon for a business owner who's getting ready to face this to say, I'm completely lost. I need to make an appointment with my CPA, my payroll company, all of the above, okay. We have done some work for our for some of our clients who were early entries into the program and made their calculations for them. Luckily, except for 1 or 2, everybody's at 100% forgiveness. The two that I know of that are not really just couldn't get business back to the level that they had it before, so they really couldn't spend all the money, at least not in the right way. So they just said, hey, there's money left in this account we weren't able to spend. We're just going to return it rather than go into the loan program. But again, the forms and the calculations are a little bit complicated. We're giving you some guidance to make it a little easier to kind of understand the terminology and some of what's going on. And then tomorrow's presentation really is a better walk through the forms, where we'll look at the 3805 EZ, some of the key instructions on it, and we'll look at the full form 3508. And then, as everything has been with this program, so many changes, even day to day. One day, Bill and I were doing a program on the application process, and probably about 2 o'clock, 2:30 our time, the SBA had released new guidance. So part of what we said had to be updated for the very next day. So it can happen even as far as that goes. I am myself going to the Treasury Department's website usually twice a day just to check and see if anything new has been posted. Okay. The rest of my slides kind of go through the 3508, some of the documentation that you need to provide. And it is, if you've got a larger company or a complex payroll, there's a lot of documents. You've got to be able to show to the bank and to the SBA that your calculations are correct and that you spent the money in the right place. They're not going to say, they're not going to take "I did" as the answer. They're going to say, we need to see first quarter 941, we need to see second quarter 941, we need to see detailed payroll calculations and some of the spreadsheets that we have alluded to. Now, the remaining slides kind of go through some of these things, but what I wanted to do was spend a couple minutes actually getting y'all into the forms and some of the areas where we can, actually find the real information that's out there. Okay, so the references that we primarily use to get the latest and greatest information. So we're not talking to my brother-in-law, anything like that. We're not getting any fake news or going to any blog sites that are, posting things that just aren't true. We go to treasury.gov, okay? We go to sba.gov. If you need information, I've got a link on my website that'll guide you there and some of my own comments. And then, of course, the Small Business Development Center at Southeastern, kind of the sponsor of this program. They are funded by the SBA. They get a grant from the SBA. So they work with the SBA on a day-to-day basis. They have great information and great resources, and they're free. So absolutely a good place to go to get your questions resolved. If you do have a question for me, if you'll email sgarrety@garretycpa.com, we will do our best to get you an answer. We have been doing this for a couple months now. We certainly try to get to everybody. And I think we've done a good job of getting answers back, and we will continue to do so. But if you'll bear with me 1 minute, I'm going to bring in the website from the Treasury Department. Okay, it is downloading for me. It's taking just a second. There we go. All right. This is the home page or the front page of the Treasury Department's website. Okay, we have the Treasury Secretary there. And this red banner right here takes us to the information that we need under the Paycheck Protection Program. If you'll click here, give it a second to load. We'll see that immediately we're under the Small Business Paycheck Protection Program. And if we scroll down a little bit, we have all the tools. Outlines of the program from its very beginning, and we start to see applications for forgiveness here. Okay, the revised applications for borrowing, which right now we know are open until June 30th. Okay, and the instructions. That is a tremendous help for us. And then if we come down a little bit further, these FAQs. Last updated on May 27th, so it's been 3 weeks, almost 3 weeks since we've had an update on the FAQs, but I promise you this one, especially with the release of the new forms, will be changing very quickly. That's one of the ones that I look at. And again, there are FAQs that are asked by banks and the lending institutions as well as individuals. So you do have to sort through it a little bit. And then the interim final rules on guidance. This is the actual law. 617 was there. Last post here. This is a little confusing now because the law was written and they've come in and changed it. And it kind of goes line by line telling you what's happened. But this is where you go get the latest and greatest information, is directly from the Treasury Department. Okay. The other place that I like is the AICPA. Okay. Stands for the American Institute of Certified Public Accountants. I am a member. Okay, and they have some tremendous resources. Anybody can go to this. You don't have to be a member. This is their landing page. And if you come over here to this gray area and collect or click Coronavirus Resource Center, it will take us to this one. And then we can go to the Paycheck Protection Program. And it's in purple for some reason. I guess they like LSU. All right. Navigation isn't as, it was written by accountants. Let's just remember that, okay? They talk about their town hall series and some of the other things that come down, but as we can come down to it, they have links back to the Treasury Department. And down here where these little pluses come in, okay? PPP loan forgiveness resources. This is where you would want to be, okay? There is a calculation spreadsheet here. It is not updated for the 24 weeks yet. Okay. I think they were waiting to make sure the form was published, which came out this week, and probably over the weekend and early next week, they're going to have an updated PPP forgiveness calculator. Their disclosures in here, it uses the 8-week covered period, not the 24-week covered period. Okay. Great tabulation tools, great resources if you have complicated payroll. And I think you could even start on this and start putting in some of the data, the employees' names and all those type of things. And you can just copy and paste it into the updated worksheet when it comes out, probably next week. But this is the only calculation sheet I'm recommending, just because I know of the amount of testing and things that it will go through. And I know once the 24-week sheet is out, it's going to be highly accurate, highly correct, and looked at by dozens and dozens of people. Okay, with that, that's given me, almost 15 minutes we've been able to talk, and usually there are a number of questions. So why don't we spend a few minutes and go through some questions.
Okay, the first question is, has the FTE deadline been extended to 12/31/2020?
It has. So one of the safe harbors is, if you were that 10 employee person before and you're only at 8 right now, will you be 10 or on December 31st of this year, will you be back to 10 full-time employees? And if you are, that's a safe harbor. It's like, yeah, I wasn't doing great, but hey, now I have all 10 employees back. And that is a safe harbor for you, which gives you your forgiveness.
If you use the 24-week covered period, can you turn it in early?
They haven't said yet, okay? I don't think I would right now. If you use the 24-week period, I would just run to the end of my 24 weeks and turn it in. That's not going to hurt you. We've got 10 months from when you got your money to finally turn the money in, or to finally turn the application in. So I don't think I would turn it in early. I think I would calculate it, and then I would just kind of double check it at the end of 24 weeks and make sure there wasn't something, better that was out there.
Is the deadline for the PPP loan application June 30th?
To make the application, it is still June 30th. There's been rumors that they may extend it a little bit, but I don't know. Congress isn't really meeting on that part of it right now. And on June 30th, it's going into the 4th of July break. So I don't know. I'm not real confident that it'll go beyond June 30th. So I've got a few stragglers out there who haven't filed yet. We're going to try to get their applications in this week.
Since the period was extended to 24 weeks, can an employee be paid more than the $15,384 over the 24 weeks?
Absolutely not. Okay. They have capped the amount of compensation. So the rate per week could change, but the total amount of compensation that any one person can receive is still at that $15,384.
My CPA has never included health insurance premium payments in the quarterly 941. How might I include these expenses in my loan forgiveness application?
Okay. They don't have to be, it depends on the type of plan that you have. A lot of employers have, they treat the health insurance payments as a non-taxable fringe, and they don't actually go on the 941. You have a 125 plan or something like that. If the company is paying them on behalf of the employees, they're still included. So you take gross payroll plus the medical cost or the insurance cost, plus any 401k contributions you may have made for them. The worksheet, if you go to the AICPA and download that worksheet, has different tables so that you can include those things.
If you move from 55 hours per week to 40 hours per week, will it count as a reduction in salary?
It won't, okay? Your cap is 40 hours a week, so you're fine there. And vice versa is true too. If you go to 55 hours a week from 40 hours a week, do you count for anything extra? No, you don't. They cap an individual at 40 hours.
If I receive my PPP money before June 5th, is it automatic that I get 24 weeks to spend the money, or is there anything I need to do to benefit from the 24-week time to spend the PPP funds?
Okay. You receive the money before June 5th. It's at your option. You can choose 8 weeks or 24 weeks. Okay. The only thing that you're saddled with, I'll say that on the early loans, the loans before June 5th, is your repayment period is still 2 years if some of it isn't forgiven, as opposed to people who get their money after June 5th, their repayment period is 5 years.
Okay. Is it 60% and a maximum of 75% for payroll?
No, the maximum, you can spend all the money on payroll. Okay. And a lot of the businesses that I do work for are, especially under the 24 weeks, they're just going to pay rent and utilities on their own, and they're going to use all the money for payroll. So the maximum is 100% on payroll. The minimum is 60% on payroll.
As for test 2, reduction in salary, what if none of the employees from 2019 or before the pandemic are still employed with our company? So now all employees are new. Can the new employees be paid less than the 75% if it's for the same position but not the same employee?
Okay. That is a tricky question, okay, because they're going to look at the total amount of payroll paid during one of the reference periods, during the total amount of payroll paid during the covered period, okay? Those will have to equal. Agreeably, it may not be John Smith working for you anymore. It may be Jane Doe, and because she was just starting, she wasn't at the same salary level that John Smith was, who might have worked for you for 5 years. So that is built into the equation, but we're still going to have to essentially spend the same amount of money on payroll, whether it's on 10 people or 14 people.
If you applied before the revised act on June 5th and your payback period was 2 years and the paperwork signed, will the bank automatically change this to 5 years?
No, they won't. They've been clear about that, at least so far. What happened when you signed with the bank is you signed a note, okay, on the loan that was set up for 2 years. They're not going to make the banks go back and redo all those. So just like my own company, we got our money in May. We're going to be left with a 2-year payback period. People who got their money much later will have the 5-year period.
If my 24 weeks ends before 12/31, do I still have until then to restore FTE counts?
Yes, you do. You have until 12/31 to restore the FTE count and to restore that 25% reduction in salary. So that goes all the way to the end of the year, even if your covered period ended, next week, you would still have until the end of the year to restore those things.
Please revisit the question about the referral period. Do you think it's an either or at the borrower's discretion, or do you think it must be the lower number? I know you said there is a difference of opinion.
Okay. As far as the referral periods go, we've got 2 stated referral periods unless we're a seasonal employer. Anybody who's got a big fluctuation in seasonality, there are some other rules for them, but we'll take the base employer. You use the February 15th, 2019 to the June 30th, 2019 numbers, and you use the January 1st, 2020 to February 29th, 2020 numbers, and you see which one gives you the lowest FTE count, okay? That's the one you're going to want to use because that's the one that maximizes your forgiveness. Now, if the numbers are the same, you can use either one because, the numbers don't change. But typically, if one was 11 employees and one was 10, we're going to go with the 10 employees. That's that's our election, and we're allowed to do that.
What if you offer to bring a person back, but at a 20% reduction due to the lack of work, and they do not have to come back due to funds they are now receiving from unemployment? Does that count against you?
Okay. As long as we send our offer to come back to work letter and say, hey, your job's reopened, we haven't dropped them below their 25%. It doesn't sound like if you said it was 20%. And we just are able to document that we sent that letter, we should be fine. So those letters and Karen will be sending out an email that has all these references in it. So you're probably going to want to type, put it on your own letterhead and take the wordings and get it out to any of those employees who haven't returned.
If PPP funds were used to pay independent contractors, can this amount be paid back as the loan?
Yeah, it will have to be. It's going to be one of those things where it's a non-qualifying expense, and it'll definitely go back as part of the loan.
One moment. Our business volume, which is a pharmacy, was down 25% in March, but rebounded in April and May. We feared a major collapses in our revenue and earnings that did not happen. Should we just repay the loan at full at this time?
Okay, I don't, this is one of those things that we're not able to easily answer, okay? I think this is one of the times where you sit down with your CPA and you sit down with your banker and you say, guys, what do you think, okay? Your banker is going to be very conservative. He's not going to want you to be in any trouble. Your CPA is not going to want you to be in any trouble. And they can easily, help you forecast and look at what's going on. And they may say, hey, no, it just shifted from 1 month to the next. You're actually up 10%, over the first 6 months of the year. You don't really qualify. Let's send it back. Okay. But they may see some other things in there, especially as they compare it to last year and say, no, you were down in March, you're off a little bit in April, May didn't start out right, and June looks iffy. So that's what I'm saying. We just need to document the reasons that we did it, okay? And I think getting those third-party opinions are critically important if you ever have to defend it.
If a company gets a PPP loan and does not use it for payroll or utilities, rent, or interest expense and just sits on the loan funds, it is understood that no part of a loan would be forgivable. So at a later date, can they use funds to pay off, say, a business vehicle loan and then just pay back the 1% loan over the loan term? Does the business run a risk of getting in trouble?
Well, I think it does, okay? But maybe not because it decided to put it in the bank. Why did it apply for the PPP funds if it didn't need the PPP funds? That's what I would be more worried about, saying, hey, a lot of the businesses that have applied for PPP, if they hadn't have gotten it, their doors would have been closed or everybody would have been on unemployment for 6 months. If your business wasn't at that point, why did it apply for PPP? So I think it's time to sit down with the accountant, maybe again with the banker, and say, hey, should we have even gotten them? And then if we did get them, why wouldn't you spend it on payroll while you have it, since that's the purpose of the funds? We got to go back to what the overall goal of the funds were.
What if you didn't have employees the first quarter of 2020, but did have all of 2019?
Okay, well then you would absolutely have to use the 2019 reference period. Otherwise, it would throw your numbers probably in a tailspin.
Do you have to file for forgiveness immediately after the 24 weeks, or should I wait until 12/31 to meet FTE requirements?
Okay, what we know right now is you have 10 months to file for forgiveness, okay? So it doesn't need to be immediate, but most of us, if we've gotten our funds now, will be, exhausting our money after the 24 weeks. And I think you should start preparing to file now, okay? So I don't think it does any good to put it off until the information's, 3 months older in our heads. I think we start to prepare our forms now, start to gather our data now, and start to analyze it now. And if we do that, we're kind of ahead of the game. When our 24 weeks ends, we might look at it and go, hey, we're fine. We met our FTE requirement. We don't even have to wait for December 31st. We're good. We can apply for 100% forgiveness. Of course, you send that application in now. If it seems low, yeah, I would hold off and I would wait until I got to December 31st and see if my FTE count came back and if business was restored.
If business has a vehicle loan, can part of the loan be used to make the loan?
Okay, only the interest portion. Okay, then what we've heard in guidance from the SBA is they're gonna want to see that the vehicle was registered in the business. It was titled to the business.
If you're an LLC and have no employees, when can you pay yourself, and how much did you pay yourself?
Okay, LLC, no employees. Okay, that under the self-employment guidelines. Okay, you would take a weekly draw, essentially. You would get your PPP funds. They would be equal to 8/52 of last year's profit. So we have to do some math there. And there is some guidance on, some separate guidance on self-employed forgiveness. It is a little different than if you have an employee, because not necessarily all of it will be forgiven.
Okay, it is 3 o'clock, so this will be the last question. Is employer FICA now an eligible payroll cost?
No, they simplified when they did the PPP program and said, hey, we're just going to look at gross payroll. So the FICA isn't a cost or an expense. It wasn't used to calculate the amount of PPP you got. It's not going to be thrown into the amount of forgiveness.
Thank you, Bryon.
Well, Bryon, can't thank you enough. These information broadcasts are just really, really helpful for everyone. I want to draw attention that we've got some contact information on the screen. If Bryon could forward that slide once, you'll see the information there. If you can contact SBDC people, you can contact Bryon Garrety. They'll be sending some information out. Karen will send some information out to you. We've also got the spreadsheet calculator webinar tomorrow at 2. And I'm going to thank our sponsors again, St. Tammany Corporation, Hammond Chamber of Commerce, Louisiana Economic Development, and of course SBA and our Southeastern University. I bid you a good day.